Crypto Hotep here, and we are back with another investing video. We are on week 47 of the Family Stock Portfolio and Dividends Tracker. Now, if you're unfamiliar with this series, feel free to go to my channel, go to week number 1, and watch that whole video in its entirety. That'll give you my thought process, my methodology, and the reasons why I'm doing this. So basically, in a nutshell, I gave my family a short list of stocks to choose from based on my own research. They picked out what companies they felt most aligned with their goals and, how they felt, and just companies they overall liked. We then proceeded to use M1 Finance as our broker of choice. The reason being, with M1 Finance, and you'll see this in a second, you can create one big portfolio, and then within that portfolio, you can have kind of sub-portfolios of stocks. They call them pies. So every one of my family members has a pie with his or her own stocks within that pie. And then every week we go through this portfolio and we go through market news, we go through balances, dividend activity, which is very important for us with generating passive income, and the overall investor's sentiment and how we're feeling about the markets. First and foremost, these videos are for my own edification and my family's, and maybe when I'm gone, they can use these videos and continue on or maybe learn something from them. But by no means is this financial advice. Please do your due diligence in researching stocks before you invest in them, and we can jump right in. So before we go to week 47, we look at week 46, and at week 46, our balance was $18.81 and 36 cents. Dividends earned were 94 cents. Market gain was $56.45, with a money-weighted rate of return year-to-date of 3.33%. So let's hop into this week. This week we went down a little bit. Our balance is $18.78 and 62 cents. Dividends earned, we did increase. We went up to $1.02. Market gain $49.77, with a money-weighted rate of return of 2.91%. So let's see, did anything happen from this week, from last week to this week, I should say. So the only thing that did happen is we did have one dividend activity with Lowe's. So within my portfolio, I hold the Lowe's company here, the hardware store, and I was paid a dividend on that particular stock. And if you're looking at these dividends, especially with Lowe's here, and you're saying, oh, that's only 3 cents, that's not a lot, Crypto Hotep, you're 100% right. It's not a lot. But if you've always been following me in these series, first off, thank you. The other thing is, these dividends, these small dividends, it's like a snowball. They start off small, and as you build your position with these stocks, i.e. get more stocks, buy more stocks, then these dividend payments will grow as well. And that's what we're looking for. We're looking to hopefully generate a lot of income with these dividend stocks in the future. And these are all good companies we're willing to hold for that length of time. So not a lot has gone on within the portfolio between last week and this week, but just to be consistent, we're gonna look at everybody's portfolio bottom to top. So at the bottom, my wife, unfortunately, is at the bottom this week. Year-to-date money-weighted rate of return in the negative 8.16%, negative market gain of $10.74, with a balance of $137.45. As you can see here, we kind of peaked here at 148 on the 31st of January, and we've just kind of been trending down ever since. Every stock in my wife's portfolio right now, year to date, is in the red, unfortunately. Celsius with the biggest blow again. So this would be the start of the second year that we've been holding Celsius. And if you've been following this series, you know that towards the end of the year, last year, that's when Celsius really started turning red. So it looks like we're still in the red here. Celsius, I believe, was at about $23, $24. Google down a little bit less at 0.04%. Tesla also taking a dip at negative 7.72%. And then Pepsi, which had really strong earnings, down a negative 4.29%. So all in all, portfolio down over 8%. Not concerned as of yet. I am still watching Celsius. We want to wait for the earnings to come out on Celsius and see what we're working with here. Tesla, fantastic company. Not worried about that at all. And then Pepsi, we'll dip into Pepsi's earnings as well because I'm not really worried about Pepsi either. Let's look at our middle stock. Our middle stock, money weighted rate of return is a ridiculous 10.91%. Fantastic. Has cracked $200 in the balance at 208.38. Market gain of $19.03. And let's see what we have here. Starbucks just on a tear currently, up over 23.36%. The chart on Starbucks is probably one of the best charts ever. It's a distinct double bottom in price, and Starbucks has just been going up and up. Costco, nobody's stopping Costco, up over 15%, 15.5%. Amazon just had some fantastic earnings as well today after hours, so we may see Amazon go up a little bit. Target down a little bit less than 0.5% here at negative 0.38%. And then Nintendo, amazing. Don't call it a comeback, up over 22%. Yes, Nintendo. The markets are loving Nintendo's innovation on the new Switch 2. New games are coming out. People are feeling optimistic about Nintendo. You love to see it. Tesla down over 8% though. That's a fantastic percentage on Nintendo. I love to see that. Nintendo has been down in the red last year, so it feels really good just to keep buying Nintendo just because you like the company, just because they have good financials, and finally having that turnaround. And this is Nintendo's a fantastic view on this as well, only because with Nintendo, it's a very similar case with the markets, right? The markets the stock market is somewhat manipulated, where sometimes price needs to come down on a stock just so institutions, banks, bigger wallets can buy it at a cheaper price. And Nintendo was red for most of the year, second half last year, but we kept buying Nintendo, and we didn't want to stop buying Nintendo because we believed in the company. Their financials really look good because they have no debt, which is amazing, and it just takes time. And Nintendo had a fantastic announcement about the Switch 2, and we are reaping those benefits of buying at cheaper prices. Case in point, our youngest stock up over 10% again year to date. Market gain up over $20.59. Cracked that $200 mark on the balance, 243.57. Nintendo up over 22%. Our youngest and middle both have Nintendo up over 20%. Ridiculous. Starbucks up over 23%. Apple down over almost 5.5%. And then Tesla down over 7.5%. Tesla did have weak earnings this week. They didn't meet their revenue goals, which understood. You can't meet them all, but we're still buying Tesla, especially with Elon, Doge. The administration that's in. It's just an easy play. Let's go to our oldest. Our oldest is year to date. It's kind of flat right now since January, but 0.19% in the negative. That equates to negative $1.21. Still up over $600, 634.24 in the balance. And as we all know, our oldest only holds the four main stocks: Apple, Tesla, Costco, and McDonald's. We are up on Costco, up over 14.5% on Costco, and then McDonald's up over 1.5%, and then following the trend, Tesla down over 7%, and then Apple down over 6%. Not really worried about that whatsoever. And then last but not least, my year-to-date return on my stocks up over 3.5%, market gain of $22.10, dividends earned over $1 at $1.02, and then my portfolio is up over $650 at $654.98 in the balance. Um, most of the sectors, or all of the sectors, I should say, are in the green. Not a bad showing right now. One thing we will go into is the industrials and energy. If you've been following us, you probably remember me saying industrials and energy would be taking the cake, I believed, at that time before the new administration came in. My industrial and energy sector is up year to date over 6.5% alone, and everything is in the green. Waste Management, Deere and Company, Cintas, Duke Energy, Chevron, which I said Chevron and Exxon will be good beneficiaries of the administration coming in. They are in the green. Union Pacific, which hiked their dividend this week, up over 6.5%, and then Caterpillar up over 1%. So industrials and energy, one of the bigger percentages of gains in my portfolio other than the growth in the meme stock sector. Okay, technology is kind of bleeding out right now. Apple down over 6%, also with me, so that trend continues with Apple. Coinbase up over 8.5%, almost 9% here. Amazon up over 8.5%, almost 9% here. And then Meta just doing ridiculous Meta things, up over 21.5% here. AMD down over 8%. I still am hopeful on AMD. And I still have faith in AMD, so I like my AMD play, and I'm just going to keep buying AMD very cheap. Nvidia, going to buy the dip on Nvidia. Broadcom, love Broadcom, and then Microsoft as well. You can't go wrong with those at all. So with that being said, guys, our family portfolio for the week, for week 47, 1878.62. with a money-weighted rate of return of 2.91%, market gain of $49.77, and then dividends earned of $1.02. Really quickly, we'll go into Pepsi's profile here, as we touched on the stock that's in my wife's portfolio, because Pepsi did have earnings. So I use stockanalysis.com. It's a very good tool. They present a lot of the information very cleanly so I can view it for companies. As we can see here, though, Pepsi also beat their earnings and revenue this past earnings call. So the earnings call was this week. They beat their revenue 28.15 billion from a forecast of 27.85 billion, up over 1% there. And then the earnings per share was 1.96 from a forecasted 0.94. So fantastic earnings. The forecast from several quote-unquote analysts is that they will beat their revenue, will beat their earnings per share next quarter as well. So we do have a little bit of a trend here when we look at revenue. When we look at Pepsi's revenue forecasted out, it looks a little stagnant around the 30 billion or close to the 30 billion mark. The revenue growth somewhat stagnant, but still on the upswing, so not really worried about that. Earnings per share somewhat in line with the revenue as well. And if we look at dividends, Pepsi is a dividend stock, and a very good dividend stock. Their dividend yield is 3.73%. They have a payout ratio of over 77.99%. That may seem a lot to some, but so does Coca-Cola. So they align about the same way. Their growth years in dividends is over 53 years, which is substantial. And their dividend growth is 7.79%, which is great itself. So all in all, a good stock to have in your portfolio. I personally like Coca-Cola for my stock, but Pepsi is a winner as well, I feel as though. So with that being said, guys, we will end this video. And as always, thank you and happy investing.